This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion.
A reader writes me that one of his biggest challenges is to trust in the forecast made by technical analysis. Another reader writes and says that his emotions are getting in the way and that when he loses, it feels like he's losing personally. Another reader writes to say that he is using Gann technique and Murray math analysis. It's a minefield out there. There is so much misinformation, so much nonsensical information in the form of websites, books, podcasts. At the end of the day, the only person you can trust is yourself. But here's the deal. If you're following a narrative, if you're following a story, and you don't know exactly how that story works, Murray math analysis, or technical analysis that purports to forecast market direction. If you don't know exactly how it works, why it works, what it is, down to the micro little bit, and you're still doing it, you're the type of person that goes to Vegas, sits at the slots, and gambles all day long. You're not a serious person. Serious people stop. And they say, what is the damn playing field? Who's on the playing field? Somebody comes to me and they say, oh my gosh, I want to do day trading, da-da-da-da-da. Well, who are they competing against? JP Morgan, Goldman Sachs, Jim Simons, operations with hundreds, if not thousands, of employees glued to screens like robots, trading with technology and access and information that you don't have. But just these couple little examples that I toss out to begin with, the first three. Using technical analysis to forecast. This has got to be, and it's been going on for probably 100 years, one of the biggest scams in markets. The idea that if some wiggly line is doing this, that means it will continue to do this. It's just bullshit. Absolute bullshit. And there is just books and books and books telling people you can do it. Then on the emotional side, if somebody is trading or investing and they lose and they feel like they're losing means they are a personal loser themselves, they are a loser because there's enough information to tell you that's not true. So if you're losing on a trade, if you're losing money in the normal course of trading, the normal course of your trading strategy, and you take it personally, you're actually a self-fulfilling prophecy. You're a loser because there's enough damn information, enough insights to tell you that's not the way to think. So if you think that way today in 2021, you're either a brand new trader, investor, maybe a little ignorant, a little not familiar, or again, you're a sadomasochistic lunatic. And I got to tell you, that last one, Gann analysis. If you see the word Gann, just look for your wallet. Because whoever is telling you the word Gann has your fucking wallet already out of your pocket. They've taken all the money out and you're the sucker. Just remember that. If anyone comes to you with the word Gann, and this is just like in the damn Godfather, right? At the funeral, Vito tells his son, whoever comes up to you to try to make the meeting with Barzini, and it turned out to be Fish, old Abe Vigoda, whoever comes up to you is gonna stab you. So if anyone ever comes to you and they approach you with Gann analysis, just know they're not a friend, they're a fucking asshole, and walk away. Don't even fight them, because anybody who believes that kind of stuff, they're a confidence man, a con man. So they're not going to quit if you tell them off. The best thing you can do is to extricate yourself from those types of people. Now let's break all this crap to the side, and let's just talk about the 5 main issues that are really at the heart of any good investing strategy, trading strategy. And frankly, this doesn't have to do with markets. It could do with anything. First, what the blank are you going to trade? What does the portfolio look like? In trend following, you want to be following diverse markets that are not correlated. The reason for that is quite simple, my dear Watson. If you're trading markets that all go up and down like lockstep at the exact same time, you have zero diversity. Perhaps you have all kinds of different names, different equities, but if they move, if they are correlated at a 99% clip, you might as well be trading one of them at 10 times the leverage or whatever the number of positions or equities that you have that are all correlated. Just not smart. So the best thing that you can do is to have a portfolio structure where you are tracking diverse, non-correlated markets. For example, gold, palladium, corn, soybeans, interest rates, currencies. Don't come to me and tell me, well, I just want to trade FX. Well, you're an idiot. Why do you just want to trade FX? Because none of the best traders in the world only do that? You've decided that you're going to go against all of that wisdom and you're going to just pick a market because that market looks, what, exciting to you? What the hell are you doing? I might sound excited right now, but this is not about excitement. So you have that diverse tracking portfolio. So let's say you want to trade crypto. Might not be the best idea in the world, but look, a lot of people have made a lot of money trading crypto. And they haven't made it with fundamental information. They haven't made it with Gann analysis or predictive technical analysis, forecasting something. If they did, maybe they got a little lucky. But those that have made it on crypto are riding trends. Those that make it in any market are riding trends. That's the whole thrust of every damn thing I'm talking about. So once you know what you're going to track, what is the potential for where you can trade, what's the next step? The step that everybody thinks is the most important step, because everybody deep down wants to buy something and forget about it. I just hope it will go up forever. So if I just know when to buy at the right time, it will just go up forever. I don't know who suckered so many people to believe this, but it's still important. You still have to know if you're going to have that tracking portfolio of markets. When do you enter? When? You got to have a rule for it. Does the rule, back to my earlier point today, does the rule have a foundational, make sense reason? And trend following, the rule for entry is a momentum indicator. All this means, has a market broken from a trading range either higher or lower? Some significant break out. Well, Mike, what does that predict? It doesn't predict a damn thing. It just means the market's moving. Well, then what do? You get on. Then what is the next step? What's your loss strategy? What's your exit strategy? You should have 2 forms of that. Again, there's 5 rules here. What's the tracking portfolio? When do you enter? Now that you have made an entry, your stop, your potential loss. Well, when you take that momentum indicator to get in, you hope if you're long, the market goes straight to the moon. You hope if the market collapses and you're short, it collapses straight to hell. But things don't generally move like that all the time. So you have to be prepared to exit. So you've taken that momentum indicator, and in my hypothetical example here, you're long. And you're waiting. Waiting for what? Can't I predict which way the market's going to go? No, you're an idiot if you think you can do that. All you can do is wait. Wait for what, Mike? Wait until there is price movement that tells you to take an action. Price movement that tells you to either exit with a gain or exit with a loss. You mean I actually just sit there and I can't control anything? And I'm at the mercy of waiting on the market? Waiting for the market to either hit my stop and give me a profit or hit my stop and give me a loss? I just have to sit there. Staring at the screen doesn't help me. Yakking on chat forums doesn't help me. Complaining on Twitter with other traders doesn't help me. Is that what you're saying? I literally have to take my entry signal and sit back and go get a cup of coffee or go for a jog? I can't do anything to affect the price. I'm a smart guy. I went to school. I've got an MBA. I worked for a brokerage firm. All of that must mean something, right, Mike? I mean, surely there's a way to find an edge to know what the market's going to do next. All my sarcasm in the last 2 minutes, a lot of people think that. That's why a lot of people lose. So yeah, you take that entry signal and then you just sit there like a dumb stump and wait. Let's say you're long. Wham, bam, thank you, ma'am. The market comes down 20%. Let's say that's your stop. You get out. Whoa, hold on. Are you telling me I just made an entry and I just lost 10 or 20%? Yeah, you did. Why is that? How much do you want to lose? 50%? 75%? You're not just trading one market here. It's a portfolio mindset. Because if you think you're going to trade one market, stop listening to me. Stop listening to everyone. If you're a one market person, a one market trader, you're a buy and hold dude. Just go buy an equity index at Vanguard, set it, forget about it, and take what the market gives you. That's it. So yes, you are not a trend following trader on one market. No effing way. Doesn't work that way. When the year starts, you don't know what market is going to be the market or markets that take off to give you profits. How can you know? That's the whole damn point. Nobody can predict a damn thing. Now, of course, there are going to be situations that are historic and they are going to be framed in stories. And we all know that George Soros made a ton, maybe $1 billion shorting the pound. That ain't you. You can aim for it to be you, but I'll guarantee you all those people out there that thought they can make one big macro call. You hear about the winners in the macro forecasting call game. You don't hear about all the people that busted out and lost their house and blew their fortune because they did not have a trading system that was predicated on, like trend following is, how can I control my downside and stay to live another damn day? Because if you die, i.e. your account dies, i.e. you'd have no more money left, you can't play the game. You're dead. You're in the coffin. You're 6 feet under. You're useless. You're useless to your family, your friends, your kids. You're useless to yourself. I must share with you a quick side tangent. Years ago, over a decade ago, I was directing a documentary film on the 2008-09 crisis. I was at the Capitol in the state of Virginia, and I was at the lottery offices. And I interviewed some man on the street type guy, just an interview from a random person. And I was asking him about his investing strategy. his investing strategy, he had been so seduced by lottery commercials, he actually thought that buying lottery tickets was a retirement strategy. I mean, look, people think crazy stuff. It is an absolute minefield out there. Now, let's do another side tangent. Just so you don't think you are listening only to me, this guy, Mike Covel, who is a little bit ranting today, but ranting with a solid foundation. Just so you don't think I'm a guy out there on the ledge by myself. 6 books filled with names. Names that might not use my exact tone or verbiage or words to describe what they do, but they do exactly what I'm talking about today. 100%. On my podcast, you will find those names. The Ed Secotas, the Tom Bassos, the Martin Lukes, the Jean-Philippe Bouchot, the Jerry Parkers of the world, the Larry Heights of the world. That's the cool thing about trend following. That's the cool thing about me ripping on predictive technical analysis or me ripping on GAN techniques or whatever other strategy. There are so many trend following practitioners with so much measurable success using strategies that anybody can understand. For you, Mr. Listener, Mrs. Listener, to not go find out about them, their strategies, how I can show you, that's on you. That's on you. Because all these other strategies that play to your heartstrings, that make you feel like you're going to get rich quick, that's all they are. Getting rich quick. Back to the slot machines in Vegas. Now, I said at the top there were 5 issues to trading. Your tracking portfolio. When do you enter? When do you enter with a loss? When do you enter with a gain? And just like the entry is based on momentum, a price simply moving in a direction, getting out is the same way. A price simply moving in the opposite direction. Well, why is the price moving, Mike? Come on. Nobody knows. There is absolutely no way for anyone to know with certainty why a market is moving, especially when you look at it and blur your eyes a little bit and look at the totality of all markets over time. The only way you can play that game, and I will point you to a very revered name in the trading world and a book by a self-help guy, but go check out Anthony Robbins' book. I think it's called Money. He talks to Paul Tudor Jones. What does Paul Tudor Jones say? The exact same thing that I'm saying. But like I said, there was 5 issues. And the 5th one is interesting and perhaps the most difficult to understand and apply. And I call it money management. Other people can call it position sizing. All types of names. But the point is this. You have limited capital. I have limited capital. Everyone has limited capital. Even Big Daddy Omaha, Warren Buffett, has limited capital. Now, we don't want limited capital, but that's what we got. We got limited capital. So when it comes time to place a trade, how much money do you trade? It's a really important question. There's a little detail behind it, and you're going to have to dig beyond this podcast to have a full understanding. But a simple way to wrap your arms around it, and I often ask this of audiences, how much will you, as a percentage of your total capital, will you bet on every trade? I often see hands in the audience go up 10%. They'll bet 10% on each trade. If you get 3 or 4 or 5, 6 trades wrong in a row, like you've freaking lost more than half of your capital. You can't do that. That's, again, fucking moronic. And I don't want anybody to be moronic. I want everyone to be wise and have the chance at winning. That's right. I say the chance of winning because nobody can guarantee you winning. What you're playing for is the chance, putting the odds on your side. Putting the odds on your side so that you have a positive mathematical expectation. Now, that's a little bit of a side tangent there. You see, there's a lot of pieces to this, but it's important to bring up the discussion and get it started. So, back to how much do you bet? You don't bet 10% per trade. Here comes the signal. Here comes the momentum signal, the entry that I was talking about. You're more like 1 or 2% bets. That's how you survive. Because if you already know going into your trading strategy that when you place a trade, there's a very good chance, let's say 60% of the time, that your trade is going to end up with a small loss because you place, let's just say it's a long trade, you place a long trade on whatever, you enter, the market quickly goes the other direction, hits your stop, and you lose a small amount of money. That's normal. That's a whipsaw. But you got to be careful because if you get these whipsaws with a big bet size, that's where you get a very steep drawdown. Some people see trend following and they get worked up about the drawdowns. They say, oh my gosh, that strategy can lose a lot of money. How did you not get out? They got it all backwards. You were getting out when you get a drawdown in trend following. Drawdowns in trend following are many small losses added up. Not one trade that just got away from you and you sat there like a fool and didn't take your stop and lost 50% on one trade. No, that's not what happens. It's trendless periods, whipsaw periods, and little tiny losses add up to something big. So you see, this fifth point, the one about how much do you bet, terribly important. Because if you lose your chips and you got nothing to play with, you're screwed. I want to end with my point about Gann analysis. That if somebody comes to you with the idea that you can use Gann analysis, that it's like the Tell from the Godfather film. You just know that person is a bad egg, walk away. Here's the deal. It's much, much more than Gann analysis. It's a whole host of issues. Gann, Fibonacci, support and resistance, Elliott wave. Honestly, in this day and age, most people that are pushing fundamentals are full of shit. Is there any fundamental value analysis you can do for current equities at all-time highs? No, there's not. So if somebody is pushing fundamental analysis, well, let's just try to be nice and say they're not doing it because they're not a bad egg, but I don't buy it. Real science is about being open. Real science is about throwing all the shit on the table and just dealing with it. Not making up stories, not making up narratives, not hiding behind the door and trying to protect your self-interest. Yeah, I'm lucky because I'm talking about a strategy that's transparent. I'm talking about a strategy, warts and all, is out there for everyone to see. You have to either do your homework and accept it or put those rose-colored glasses on, drop another hit of LSD, and go back into the Wonka factory, the La La Land factory. That, my friends, is always your choice.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.